All right, guys. So in this video, I want to teach you guys how I was able to make a very nice trade on gold. I'll first of all teach the concept, and then we would now go to the main explanation of the trade. All right. So this is let me just quickly show you the trade first. All right. So this is a trade. All right. So you should see this my screen now, my Telegram. So if you're not part of my Telegram channel, you really need to be part of it. So for those of you that for those of you that need to see the trade before I took it, this is it. So this is a trade before I took it. Right, you can see where I took the trade. You can see the timestamp up there. You can see the time and everything. So this was actually a screenshot that was taken before the trade played out. You can see how everything was properly lined up, right? And then you can see everything. And then you can see the part where I executed on my MetaTrader 5. So I use MT5 to trade. You can see my MT5. You can see where I entered. I took a screenshot when I entered, and you can see my take profit. You can see my stop loss. So I had to blow out the lot size because I do not like to show how much I make, right? I don't like to show that. I think it's more of a private thing, right? So you can see where the market actually hit my TP. You can see this blue this execution line, right? That simply tells you that okay, this was actually taken on my account, right? It's not just a doctor screenshot, it's actually taken. Right. So let's now talk about the main chart. All right. So now let's talk about okay. So the model is actually a very simple model. Right. The model is actually this, right? Very simple bullish model. Right. This is a model of the trade. Right. This is a model for the trade. All right. This is a model of the trade. Right. So now this whole concept here is that we have to understand what we call protected lows and weak lows, right? Or let's say strong lows and weak lows, right? This is a bullish example. So whatever I say here, you'll be, transposing it to a bearish scenario, right? So now, what do we understand by weak lows? Now, let us understand the first thing. A weak low is a low that did not take out liquidity, right? So there's no liquidity grab, right? So this is how I actually classify a weak low, no liquidity grab, all right. So and then a strong low for me always have what they call a liquidity grab, right? It grabs liquidity before making a new high, right? So this is what I refer to as a strong low and weak low. Now let's look at this example again. Now look at this lows here. Pay attention to what happened there. This low here, it took liquidity before making a new high. So we saw a liquidity grab here. So a liquidity grab right there. And then we saw price make a new high. Right. So the strong low, you can see how it makes a liquidity grab. It takes out a previous low before making a new high. That is how I classify strong lows, right? Why a weak low? There is no liquidity grab. It just makes a high. That means this low doesn't take out the previous low. So liquidity grab is simply what? Price taking out a previous low to make a new high, right? So what the liquidity grab is price take out a previous low to make a new high. And in a bearish example, price take out a previous high to make a what? A new low. That's what it means, right? So we're in a bullish example here. So this is what I was looking at, right? So we had our liquidity grab here, and then say our price ran it, and then this was the trade idea. So now I was seeing this area as an area that needs to be mitigated, right? So I was seeing an area that needs to be mitigated, right? So that means price had not tapped into that slow yet. If maybe price hits here before going high, I wouldn't have taken the trade. But price left that liquidity run area unmitigated, right? That means there was some kind of imbalance here. This price was not tapped into, right? So that was what I was looking at. So now this is the whole model of the trade. It's a very simple model, right? Here we see price make a strong low, and then we see a weak low above the strong low, and then we see price come back towards tap into our strong low, right? This is what we call an inducement model, right? We call it the inducement model, right? So now this weak low not act as what we call it what an inducement, right? So this is an inducement, right? This one acts as an inducement for price to do what come to the original area. So now price takes the liquidity to what tap into your original zone, and then what you see what a new high printed, right? So this is basically how we look at this is how we actually the trade. It's just a very simple idea. We have a strong low, we have a weak low above it, and then we have an area that needs to be mitigated, right? So that is basically. So let's look at the trade again. Look at it. You can see there. So let us look at the trade again. So now, right, sorry about the interruption. Let us continue. All right. So back to what we were saying. Now look at the trade. Now looking at the close prices, these are the tools that determine that this market was bullish. While looking at the close prices of this market, we saw price, you can see this low here. You can see our lower high, and then we can see our price closed below this low, right? So though we do not see price weak below, right? We also use close prices to determine structure. So you can see that based on the close prices, right, there was a very clear bullish break, right? Price closed below this previous low and then made a new high. Now, if you look at the line chart, you see it's actually very clear there. You can see there, lower high, lower low. You can see our price went below this low, and then it's closed above it. This is what we call a bullish market, right? So based on the line chart, we're in a bullish chart. So sometimes you ignore the weeks. So when you have this kind of long weeks, you can ignore it, right? All right, so back to what I was saying. We could see this low, right? Price made that low, and then we're in a bullish chart, right? So market was bullish right from this point here. So price making highs, making low, and then this is where I was really paying attention, right? I was really paying attention at this point here, right? So now what do we see there? We saw that price did what? It made that setup we'd like to see. Price took out, you have age. This blue zone refers to Asian liquidity, right? So I won't be discussing that in this video because it's a different concept on its own, right? But just pay attention to the most important thing, which I explained, right? You saw price make a strong low. Why? Because price took out liquidity. I said price weak below this low and what made a new high. So what do we see here? We saw that weak low form, right? I told you guys that a weak low has to form above the strong low, right? You can see this weak low form there, right? So we saw the market give that exact thing we like to see. Right? You can see how a strong low was printed there. Price, went below this previous low, like I said earlier. Price went below this low, making what we call a strong low. So a strong low was created there. And then what do we see here? We saw a weak low above the strong low. So that was how I was able to pick the trade. It's very, very simple. We saw this liquidity graph. Just what I told you guys. Remember what I explained. The market always does that. Right? I told you that I have to see a strong low form. Right? Then we have to see a weak low above it. That's weak low acts as what? An inducement, right? So that was what I did there. Just the same setup, right? We saw price make that liquidity graph, making what they call a strong low, and then we saw a weak low above that strong low, right? So you can see the weak low here taken out, and then price comes to mitigate your original what? Low, right? So you can see how price came there, right? So as price came to that point, market hit my original low, and since we were bullish, I just simply took a trade. You can see how market hit my POI and then straight to take profit. So this was a 1:5 or thereafter, but based on my execution, I was using a bit wider stop loss, like somewhere around there, and then it was like 1:4 for me, right? MT5 and trading view are not always perfect. So I saw that my own was actually about 1:4. Right, it was 1:5, it was 1:4. I kind of used the wider stop loss, and then I wasn't very precise on my entry. That was somewhere around there, right? So it was something like this, right? Something like that. So my entry was a bit wider than it should have been on MT5, right? So that was somewhere around there, something like this, right? So it was 1:4, about 1:4, about 1:3 point something. That was how it was. So I wasn't really paying attention to RR. Whenever I take trades, I don't really pay attention to RR on my trades. As long as my trade hits 1:2 and above, I'm okay. So I'm not really focusing on must be 1:5, it was 1:4. My minimum for a trade is 1:2. So I like the market to tell me what to take. If it's 1:4, I will take it. If it's 1:5, I will take it. But my minimum is 1:2. So anything above 1:2 is good for me. So I don't really focus on it must be this RR, it must be that RR. I don't treat that way. Because sometimes when you're forcing RR, you tend to be taking losses you shouldn't have taken. So if your minimum is 1:2, that is just it. You mustn't take. I don't make it to be 1:4, 1:10, or 1:6. No, I focus on minimum at 1:2. If it's up to 1:2, I'm okay. If it's more than that, that is a plus, right? So that's just basically what I did. I go by minimum requirements. I don't force R on my trades because I've had situations where I was forcing one to 4 and then it reversed at 1 to 3 and came back to my stop loss. I've had situations where I was forcing 1 to 3 and price reversed at 1 to 2.5 and then came out to my stop loss. So that's why I don't force stop loss. I don't force take profits. As long as it's structurally okay, like here, well, this high was structurally okay for my take profit. It was okay to take profit there, right? It was very okay there. So I don't see me took it there. All right, so that's basically how I trade, right? So this, if you want more of this, do want to like this video, subscribe to this channel, and if you want to join my free Telegram channel, you can always use the link in the description. If you want to join our paid mentorship, our private mentorship as well, you can also use the link in the description as well. So it's very affordable, right? Just join us and learn how to trade for yourself and be independent, right? So see you guys in the next video. Have a wonderful day. Cheers and God bless.